Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. Market is down today because China is down. China is down because of fears of a virus spreading. We'll talk about that and whether or not this morning represents a good opportunity to buy Chinese stocks that have rallied of late or just sell them all this morning. Other news on our radar, Boeing is seeking $10 billion. We'll talk about Boeing and whether today is the day it falls through its support of $300, a number of ratings to discuss. Plus, we'll preview the biggest earnings reports from the week. Netflix today, that's perhaps the biggest one. We're going to get Intel later in the week, American Express, Discover, Synchrony. So the first real big week of earnings, banks notwithstanding. You can always give us a call, leave us a voicemail, ask a question. You can do that by dialing the number 734-494-0246. Joel, what is the word here in the pre-market session?
Well, I had to reboot my computer 3 times to confirm that we are in the red by 10.25 handles. Your high was made Sunday night right off the bat at 28.50. That high on Friday, 30.25. We'll keep an eye on that all-time closing high from Friday, 25 even. We'll see if we have the old Friday high for the week, all-time high being a major number going forward. Pre-market low, they got this down to 07.25. Not much there. Your weekly pivot at 07 even. And now trying to get back mid-range. I'll be keeping an eye on 33.18 this morning. Crude back under $58, down 73 cents at 57.85. Gold in the red by 290 at 15.5740. Silver right at 18, down 17.3 cents. And the Bitcoin bulls, they couldn't induce that rally over the 3-day weekend, trading down $225. These are the futures at 8,700. Triple D, how was your weekend? And I hope you worked yesterday because it was not a holiday.
It's been one of those weekends. The boys had a fever for 4 days, so we're fighting the 5-year-old sicknesses here. So kind of been in seclusion. And
huh?
Yeah. So obviously, the market sounds like it's fighting sicknesses too over there in China. So maybe this is a good segue into what's happened here over the weekend, because we are looking at emerging markets getting hit really hard here, and anything to do with China really obviously ground zero. What's the deal with this virus?
Right. So there's been this virus. It is part of the coronavirus family that has spread from China to other areas of Asia, Japan, South Korea. 291 confirmed cases of the virus, 6 deaths as of the most recent reporting from Chinese health officials. Biggest concern, 2 biggest concerns about this. One is China has confirmed that this virus can spread person to person, and 2, the timing of this could not be worse. The Lunar New Year, the Chinese New Year, is Saturday. This is a huge travel week for everyone in China, and so there are concerns now that people are going to be spreading this virus, take it with them, and wherever they go, wherever they travel, just take the virus with them and spread it. So that's why you're seeing tourism stocks, airline stocks all down this morning, in addition to weakness in China.
Just go to FXI. I mean, this is down 4.5%. This is a big move down here. If you really look and you think about this, this is an incredible move down this morning, because we have been slowly marching in China stocks and trying to make new highs. And over the course of the last month, we went from 41 to 45. Now in one day, we're going to get back half of those gains. So the question is this the buying opportunity for China? Because China was looking actually pretty good from a technical basis before this occurrence over the weekend. I guess it depends on how bad this virus gets, because if you think how SARS went, and what year was SARS, Spencer? Do we remember?
Yeah, it was 2003, I believe.
No.
No, later
SARS
than
was a
that.
lot more recent than that.
Yeah.
Like 4 years ago,
Yeah.
4 or 5 years ago.
I don't think so.
Yeah, for sure. Because I wasn't even trading headlines back then. I was trading on these headlines. So 2003 is 17 years ago. I was just a young buck. So I think SARS was let's just see the SARS epidemic. Let's take a look quickly.
I don't think so, Dennis.
Really? What are you finding on
Well, what was the one? Okay, well, stop.
Ebola. You're thinking of the
Ebola. I'm thinking of Ebola. Sorry, I was thinking of Ebola.
Don't question me.
Okay, Spencer, you did your homework. I'm sorry. I was thinking of Ebola. SARS. The
Doctor.
SARS one was 2003.
Gotcha.
So, okay, well, I can't remember going back 17 years ago to how the markets reacted. How did the markets react? Do we have a history of that? On when SARS happened? I remember it being bad.
Well, 8,000 people got SARS, and I think 800 of them died. So I couldn't tell you how the market reacted.
That's the last time I can remember it being bad. I
That's
remember
what I'm concerned about.
the market's really getting hit significantly. And obviously I was still at break trading, but when you're going back 17 years, you're going from your memory. I didn't do my homework.Maybe I should have looked that up, how much the markets were down. I don't know. My bad thinking about the Ebola thing. Got that confused. So it is 8 o'clock in the morning and lack of sleep. But SARS, so 2003, they're saying, chat's all over it too. So they are saying you are correct, Spencer. Do we know what the markets did back then, Joel? Can you kind of take a look? Can we kind of see it in the charts?
Well, we were at the Bright office at that time. So
Can we bring up a chart from that far back here?
Yeah, we can.
Let's look.
I don't know if
what month.
Well, I think it went on for a while.
Yeah, it was from November. Yeah, it did. It was from like November of 2002 to like summer of 2003. So it did
6-7 months.
It go on for a while.
And the markets were depressed on it for a while.
Yeah.
Also, that was in the midst of I think weren't we still correcting from the .com bubble at that time?
Oh, there was so much. Yeah. Well, we were starting to come out of it. So obviously the .com crash was 2000, end of 2001, early 2002, where the Nasdaq fell 81%. I mean, you think about these corrections that people talk about today, and you think about an index falling 81% from 5,000 Nasdaq to 1,100. So that was a correction, or not even a correction. That was like, that's a solid bear market when you lose an 81% of your wealth if you're in an index. But we're starting to come out of there, and then the SARS spooked it back down for a bit. So you can't really see it too much on the charts because, like we said, the 2000 to 2002 fall is so significant that even if there is a 10-15% fall in there, it's not even really noticeable on that chart for the simple reason because the markets were down 80%. I mean, you're looking at the S&P, but if you look at the Nasdaq, you'll see it even more significantly there. But you can see a little bit of red there at the beginning. So I'd imagine the markets got hit pretty good on it. So the question is, we're down 2%. Is this going to blow up into a bigger deal here or not? If it's not, it's probably a buying opportunity. If all of a sudden this starts to spread and, there's concerns on, and you were saying concerns about, people traveling as well, Spencer, and spreading this outside of Asia.
Right. It already has spread, and that's the concern, is it'll spread more because the holiday is this week, right? And so it just could not be worse timing. The fact that they have confirmed it can spread from human to human, and the fact that millions of people travel this time of year in China, that's why they're concerned.
Okay.
So.
Also during that, you also had a little geopolitical event going on in 01 and 02, right? With you had the .com, and then you had 9/11. So there were other factors going on. I mean, this is just the kind of thing where, you just got to monitor. I mean, how many deaths have there been so far?
Only 6.
It's okay. So I don't want to say only 6 because if
Right,
you knew any of those
right.
6 people.
Right.
But it's like, if it jumps to 40 deaths and,
Right.
it multiplies. I mean, very, 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 very difficult.
Headline risk on this.
Yep. I don't think anyone's running out buying hazmat suits yet. But, it could have an effect. I'm looking at the FXI. The move is already priced in there overnight. For 2 days. We traded down to the $43 area in the FXI, and it's just real quiet here. So you talked about the move from 41 to 45. It was actually, I'm looking at that December low, just under 41, but 45 is called 4 points. 42 and a half, 43. If the market's gonna just look at this as a pass over this event, then we should find support in this area over the next 1 to 2 days and remount a rally here. I mean, China's got about as much good news as it can with the with the signing of phase 1. So we'll see if it rebounds. But really
I mean,
hard,
and when you
hard.
look at the FXI, one consideration, if you just go to the weeklies, is we struggled at 46. And we were just trying to get up there. So really, we're still range bound. From October, go back one full year. 38 to 46 has been the range. We went back down to 38 in the summertime, and we've slowly been climbing our way back up to the 46 area again. So now you give some back, and it looks like it's failing up a resistance again. So now you're kind of coming in the middle here. So it becomes a tough call even technically. But when you have headlines like this, technicals take a back seat. If they come out and obviously the epidemic or, this virus is spreading, the stocks are going to get hit no matter what the technicals say. So technicals work really well. We always say to predict moves in the absence of news. Once there's headline news happening, technicals take a back seat. And that's, and obviously, we can look to the next technical levels to where we might think we're going, but that direction is dictated by what was happening with this, all of a sudden, this sickness. So that's the consideration here. If you're trading anything in China, the stocks are down significantly because of this virus.
And Spinner makes a good call here because I mentioned the hazmat suits. He mentioned Lakeland Industries. They're the one maker of hazmat suits. That stock, it's been quiet for a long time.
It's not going to be quiet today.
What was the...
and it's a great call because this is not traded here yet, but I can tell you it is bid up $1 here right now in the pre-market. This is going to be higher here today. LAKE is bid at 12.10 right now. Went off the board 11.03. So you're talking about a stock that's bid up 10% here right now. So there's already people who are anticipating that this is actually going to be the way to play this. And these things can go like crazy sometimes too. So keep an eye on this. Very, very thin stock. So obviously, best offer is way up at 13.25. So we don't know, exactly how it's going to trade, but I can tell you it's very thin. Like how much volume did this do on Friday?
Let's go to the dailies here. It actually sold off a little bit on Thursday and Friday, obviously ahead of these news. Not much. Looking at the daily charts for the volume on this.
It's light, real light.
Nothing at all. That can't be right.
It is.
6,
I'm looking at the trades. I can almost see all the trades from Friday. This does not trade much.
Oh, boy.
So this is super thin. So these can get crazy. And just remember, the spreads on this are going to be really wide there too, even during the day. When something like this happens, you can see like a 3-4%, 5% spread on this, especially off the hop. So be careful if you're trading this because getting in and out of it, you might be paying a big spread to get in and out of this thing. It's not going to be that easy to get in and out of. But it's going to move here today, at least in the pre-market has already bid up significantly here. So 12.10 bid. Only 100 shares bid. Best offers up at 13.25. That's the best we can tell you is it's looking up at least 10%.
It wasn't Lakeland Industries, and maybe someone can. There was another name for that company. I remember. I'm trying to think. I remember when this.
I remember Lake.
I remember Lakeland, but there was someone.
There was another one.
Just went absolutely crazy. I can't remember what it is, but. Anyways, I mean, that could be a good indicator.
Spinner's all over this trade. He must have been up doing his homework here this morning because he's given us a couple other ones too. I do not follow either of these companies, but he's got a Novavax, which I don't know anything about this company.
That might have been it.
I mean,
NVAX, and he's also got INO. He's saying both of these stocks could be moving on this as well.
Novavax is up 374.
It's up 64%. I'm not sure what this company does. Spinner, if you can enlighten us here, we can go look it up.
I feel like a few of these names are also mentioned in the Ebola thing. Years ago.
Oh yeah.
Well, that's what people. Well, I thought it. So the markets, might think it too. I thought of Ebola right away, and I guess this is different than Ebola. They're comparing it more to SARS on my Twitter stream, but that's what I thought right away was Ebola.
They're doing that because SARS was also a Chinese virus, and this, or
right,
a virus from China, and this virus was first spotted in China, so that's why they're doing the SARS thing. But
let's just hope it doesn't spread. Let's hope it's contained and they have a good Lunar New Year.
So the question now is, if you look at all these Chinese names that are weak this morning, and look at the names that have been strong of late, right? Alibaba, JD.com, even our old friend Billy, right? BILI.
Yeah,
is this morning a buying opportunity.
That's all depends on how quickly and how well they contain this virus. If they get it contained very quickly, yes, the answer is yes. If they get it contained, if they don't get it contained, you're going to regret being the first guy in this, or girl in this. So that can't be answered, that question, definitively at all. So if you're underweight China, maybe it's an opportunity to get a little bit more overweight China. But again, it's scary to just jump in at the beginning of this, because we know even with Ebola. So I can remember the Ebola and trading it, and the markets were down more than 10%, I believe, on Ebola. Were they not? What year was Ebola?
Yeah.
14,
15, I think.
Yeah, and I remember the markets having a significant pullback with Ebola. It was scary for a bit, like at least from the markets perspective. So I don't remember the SARS as well. Like I said, I was 2003. I was like doing break trading. I was trading a lot, but 17 years ago, to remember how you were trading back then, it's difficult. But I remember the Ebola, and I do remember that LAKE from Ebola as well. So this isn't the same. They're comparing it more to SARS. But again, it's a virus, and the markets were nervous about that as well. So there was a significant pullback there too. We are just really hearing about this. I mean, this is the first I've heard about it. Maybe this was out there Thursday or Friday, but this is the first that the market's been worried about this. Because you're seeing the markets trade down here today because of this virus. This is the day one. So we need more information, I would say, before just jumping in, and saying, okay, every dip we buy this dip too. I think we need more information. That's just my opinion.
It's still a good time to note. I was looking at a few of these names. Like, we haven't talked about IQ for a while, or HUYA, or Billy, or these are names that ran. I think it was 2 summers ago that really
they've been running too. Some of these,
Right.
like IQ, has really run here in the last 4 or 5 months. I mean, it was $16 back in October 24th, so it's had a 34% move here. No, it's a 50% move. 50% move since October. So some of these have run. I mean, China had been performing okay. So there's definitely people probably who are going to be coming in and buying the dip this morning. The question is, are they early? Do we get another headline? So it's difficult. It's a difficult market to trade when you have headline risk, and the direct headline risk is with these Chinese stocks right now.
What about the non-Chinese names that are down this morning? I'm talking specifically the casino stocks. Wynn, down 6%. LVS down 6%.
Yeah.
A few others as well.
And think about, okay, so you go Wynn and LVS, obviously Macau, you think about, and then MGM, which has less exposure, and Macau is not down nearly as much. So this is a big pullback for Wynn. WYNN had been running, had moved up from 120 to 151 in the last month and a half. Now it's back down to 142. It's nice support, 138 to 140. Again, if people stop traveling, though, or they're worried about traveling, you think about the airline stocks too. If you look at them this morning, they're all down significantly as well. American Airlines is down 2.2%. We go over to Delta, it's down 2.2% as well. So you're seeing it happen there as well. You're not just seeing it in the casino stocks. It's the travel stocks that are getting hit too, because everybody's jumping over to go to Macau here right now.
Quick technical note on Delta here. Nice gap and go after earnings, and now you're back under the low of the day when you had the good earnings. So if you're looking for a gap fill in this one, you don't have super far to go. You need to get into the 59 handle, 59.70. That's a buck away. That fills the gap. So, and the reason I'm mentioning that is because you had the you had the Costco, they gave that great number, right? And the stock rallied not a lot. They hit it back down, and then someone had some good sales. I can't remember who it was. No,
it was Target.
Target had bad, so that was good.
And then they hit Costco down. It was a buying opportunity.
And they gave it back to you. That's the only reason I mentioned that. But we got some big news here. In that, I don't know, want to call it airlines, but aerospace here. This is not the news that Boeing shareholders want to hear.
Oh, you don't want to hear that you're trying to raise $10 billion in loans? That's not good news? Okay. Well, if that's the case, yeah. Then Boeing is seeking to borrow $10 billion. We know this is another in a continuing series of headlines related to their 737 MAX crisis.
What was the news where it came out, and it was like a week or two ago, and I'm like, oh, they need money. And I talked about them possibly cutting the dividend, and you guys talked me out of that. But there's so much news on this stock, but there was something within a last week and a half.
Well, everybody's been talking about the possibility of the dividend. So I definitely didn't talk you out of that because we've been talking about that for a while.
Cutting the dividend now.
We've been talking about that.
Okay.
Kramer's been talking about that, possibility as well. This isn't just something that,
Okay.
it's just being thought up. This has been something that has been a concern. So you have a legitimate point with the dividend here. When they're coming out and raising cash, they're doing that because they don't want to cut the dividend. I mean, the
Right.
first thing you do, they could temporarily cut the dividend, but they don't want the stock to get slammed on that. So they're going out and they're obviously using their power to raise cash. I mean, you look at the Boeing situation, and it is, hopefully a temporary problem. So eventually you got to think that they're going to get the max back in the air. But how long this goes on, they are burning cash right now significantly while this goes on. So this is just bridge financing to get us through this problem. They're trying to raise more cash so they don't have to cut the dividend and disturb shareholders. And, hopefully, they're going to get this solved and then they'll be back to cash flow positive. But the longer this goes on, the more the possibility that they might actually have to temporarily slash the dividend. I do believe this is a temporary problem. I do believe eventually the max is going to get back in the air. And I do believe eventually Boeing's going to get back to profitability. So eventually I believe there's going to be a buying opportunity here. With that being said, now that they're going out raising cash, and we hung out, I was saying I thought this was a buy at 328 to 330. It hung out there for a week and a half.
Yep.
And now it's broken down from there. So now you got to say, okay, well, maybe take your lumps, and it's just too much headline risk here, especially with the market. I mean, we still have a key support level, which is 320, but you are going to challenge that today, and I suspect you're going to take it out because there's probably some nervous investors saying, man, now they're raising cash. I don't see this thing getting fixed anytime soon. I don't want to think about the possibility of them cutting the dividend and this thing falling 20 points when they do that or more. So it's a scare. It's now another headline issue. Again, it was always a headline stock, but now that it's even more scary about that potential dividend cut because they're raising cash to try to protect the dividend and finance, obviously, the fixing of the max.
And the reason we're talking about the dividend so much is there are, dividend funds. There's a lot of major funds, a lot of major players in this stock based on the dividend that it pays out. So
for sure,
this $10 billion loan, well, that doesn't affect the dividend guys, right? But if you come in and you cut the dividend or God forbid eliminate the dividend, I mean, that's just an automatic hit the sell button. We're done. It's out of our model.
Some, yes.
Yeah, some. And there's a lot of money in those dividend income funds. So this is just kind of a little bit of a Band-Aid, just kind of trying to tear off the Band-Aid before you rip it off. So I don't know.
Well, they can raise the money. So this is the first step. And, this is going to buy them some time. If they raise 10 billion, it's going to buy them some time.
Right.
Eventually, at a certain point, if they, this takes a lot longer than they think, eventually you got to look at something like the dividend. The dividend cut is not imminent, not if they're raising cash. And it sounds like they already have 6 billion of it. So could there be some dilution in this raise though? Do we have details? I heard over the weekend, they're looking to raise 10 billion and they already had 6 secured. Do we have any details on that, Spencer, is it going to be a convertible issue? Because then there you got dilution you're looking at. And that obviously knocks the price down as well. Or is it going to be a straight up, yield play? Do we know?
I haven't seen any details about as far as.
I don't think those details have come out, but I would imagine maybe there's going to be a convertible. You got to think. I think the market would probably be possibly spooked about a convertible issue here. Where somebody, where they issue that, now it's convertible. Now you're talking about dilution. Here they've been doing buybacks like crazy for the last couple of years. If we look, how many buybacks? When did Boeing do its last? I mean, they've been doing them. So they've been buying the stock up at $340 and $350, $380, $400. And now you have the possibility they might have to, sell stock, in essence, and that's what, a convertible issue does if it's a convertible. And, so obviously you're buying your own stock high and selling it low if that's the case. So this max thing has just went on for too long for them. That's the major problem. But 320 is the support, and support is support until it's broken.
And, and also just from throwing out all the, fundamentals, which we don't have any control, technical basis, you could do the old 320, 317, jam everybody short, and then take it above it. So to me today, I'm not going to say so much, I think you're going to breach 320 today. I mean, you can't, nothing's for sure. Let's see where it closes. If they jam it, close it back above there. I mean, because this stock, it has weathered a lot of storms here. This is definitely a little bit of different circumstance, but right now trading down to $1.95 at 320, 322.20. Probably some sell stops in there. People protecting that, but as of right now, someone is defending that stock at 321. You can't dispute that. That's the pre-market low, and for as long as this news has been out, that's the low, 321.06. So we'll keep an eye on that. In Boeing Airlines.
So we've talked the China stuff. We've talked Boeing. We might as well talk Tesla because it's not a show if we don't talk Tesla. I mean, the stock is so resilient. The bad news from the California headline 2 days ago or 2 trading days ago, coupled with downgrade from Morgan Stanley, got completely shrugged off, and the dip got completely bought. Again, the stock almost closed positive that day, held up fairly well here, and now you have another analyst coming to defend the stock, putting a huge price target on it, and the stock is trading up 13 points on a day that the market is getting hit hard. This stock is unbelievable.
Have you heard of New Street Research?
Yes.
Okay, because I'm not all that.
I've and they can move stocks as well. I mean, everybody's just looking at price target. What's the price target they're putting here?
800.
I mean, that's gets headlines, right? So, and that's the one thing too. I mean, you get, crazy, price targets, and maybe it's not crazy anymore, 800, but this is probably a street high. Is anybody this high, Spencer? I don't think so.
Well,
is anybody at $800 on Tesla?
That's a complicated question. Are we talking about the analysts' bull cases or their base cases?
Oh yeah, there's a bull case,
You're
bear case.
You're not talking about the Adam Jonas model, are you?
It is not a street high. I believe somebody is in the 4 figures. At least one person.
4 figures, really?
At least one person, I think, is in the 4 figures. So
another analyst bull train, and this just drives. So when they downgrade it, the stock barely goes down, and when they upgrade it, it just rips. I mean, you can just see whether the path of least resistance continues to be on this. We've been talking about how Beyond Meat and Tesla have been connected for the last couple of weeks because these were both short squeeze plays. They're going to get disconnected here eventually, though. The Beyond Meat is very interesting setup. The last 3 days, just, we're going to come back to Tesla, but I just want to say you've been consolidation station here for Beyond Meat. And it's trading up here a little bit too. For whatever reason, these two stocks, like I said, are disconnected. So if you get above 115.24, maybe you start squeezing them again in Beyond Meat. If you fall below the 106.11, I'm looking at the highs from January the 15th because they've had 2 inside days since then. So that's going to be your levels there. So below 106, it looks like the shorts are going to be winning. But above 115, it looks like the longs are going to be winning. So that's how I would be playing Beyond Meat, is maybe going with the winner there. You're in the middle here, so there's no pitch to hit here. But Tesla trading up another 13 points here. I mean, this is just getting to set up. It looks like it wants to squeeze them again. I mean, we do have overhead supply. We did have a blow off top up there when the thing went up 10% 2 days up to 547. But we're slowly climbing that mountain back up. And man, the shorts just have no mercy on the shorts in the stock.
Right. And also, that story about the false the acceleration, I guess that's what was put out by a short seller. They're saying that it wasn't really true information. You've cleared the 50% level of this break from 547.5 down to 492. Based on the dailies, I'm not going to give you that all-time high 47.41 because I only have one time it went there. But that day it closed at 537.92. The next day it ticked 37.84. So there, to me, there's 2 points there. Nothing up to 538. Not sure if you can get there today, but ahead of the all-time high, that's the only target I have in there in Tesla. You don't even have a daily high in between that. Beyond Meat, that is, let's see if we can look at this one. You did talk about 2 inside days in a row. Well, not quite 2 inside days, but looking at that 3-day high, 115 the quarter. That's what I'm keeping an eye on in Beyond Meat. See if you want to get back into the 120 handle.
Dennis, do you want some other stocks with some elevated short interest? Because I got a few.
Yeah, sure. I mean, it's maybe not the market like it was the market a few days ago to come and do all these short interest stocks, and now we get into a situation where the market's a little spooked here this morning. So maybe it turns around, they just start buying the stuff again. But I'm always interested in high short interest and lower floats. What do you got for me?
So maybe today is not the day. Well, I wasn't saying necessarily lower floats, but GameStop Peloton, Fizz, Match.com, Tilray we've talked about, Bed Bath, all with higher than normal levels of short interest. AMC, what else did I got here? GoGo, Ligand Pharmaceuticals, all stocks with elevated short interest heading into this week.
The pot stocks want to squeeze a bit. You can just see it. They've been squeezing here for the last few days. They're just classic. These are classic short squeezes. And we know these things can get crazy there. You just look at the charts and they're not going down. I mean, these things are in a little bit of squeeze mode here right now. So you look and you think, okay, well, Kronos is, kind of consolidation station here, gets above the high from 3 days ago, 882. There's probably room to $10. So, and remember that some of these were trading yesterday. Canada was open, obviously. So you have that, action to digest here. CGC above 26 gets interesting there again. Some of the smaller ones like, Village Farms, VFF, they pulled back a little bit. These set up that, hey, if I was short these things, I'd probably cover. So I don't know if I'm necessarily going long, but I'm, a little bit nervous here about, I still think that the pot stocks long term, I'm still saying, I think, I think the path least resistance is still lower. I think they're still overvalued, but we're in squeeze mode here right now. We've been talking about this for a while, and I think they could squeeze them more. So, the VFF's a little one. I mean, even ACB has come back from those lows in the last 4 or 5 days. It's still a $2 stock and doesn't look very good for the people who bought it $6 back in September. But at the same time, it's went from $1.50 to $2. I mean, you're talking about a 20-30% move here in the matter of 4 or 5 days. So there is some money still to be made, maybe on the squeeze side on some of those pot stocks.
We got some APHA news, right? Spencer, you want to hit us with
Yeah,
that?
they just received like a European or EU, what's called an EU Good Manufacturing Practices certification for some of their products. So just good news for their European sales. And that explains APHA's move this morning.
550, man. That has just been the level of levels we did.
Yeah, it's trying to get over it.
Yep, you did in the pre-market trading. You did get a spike up to 582, but that 550, I mean, that was that poised that stood as a level back at the end of October. You sniffed it in mid-December. You tried in January. Here's another attempt here at APHA. So see if we can hold that 550 level and get going. But look for this to hold 550 early and might get
the earnings held it down. The other ones were squeezing within the disappointing earnings held this one down. It gets above 550. Joel's right. You could squeeze them here a bit too. So I'd be nervous. I was short the pot stocks.
All right. S&Ps are eerily quiet here this morning, folks. I think since we've started the show, we've had just a nothing range here, down 9 1/4 handles at 33.16. We did have a good overnight range starting Sunday night. They trade to 1 p.m. on Monday, close for 5 hours, reopen. So very, very quiet here. Market digesting the China news is definitely having a factor on the market. So let's see, mid-range on the session. That's what I'm looking to see what happens. 31.18, your all-time closing high from Friday. 33 1/4.
Got some big imbalances, and we don't always talk about them here in the morning just because there's been some nothing burgers here for a long time. But Morgan Stanley, 582,000 to sell. That's huge. I'm not sure, if that's going to stand, if that's going to continue to be there at 930, but the stock that has been really flying. And since the earnings report, it looks like it's going to have a significant pullback here on the open. Bank of America also 224,000 to sell. Naturally, we look at the TLT, and that's going to be your major catalyst with the TLT trading up $1. The banks are going to show some relative weakness here, but that one just stands out. I don't know. Is there a headline on Morgan Stanley, or is there a rating or something?
Well,
that's just
no.
big.
I haven't seen anything on Morgan,
Okay.
but we did get UBS earnings over in Europe, and the guidance was, the earnings were fine, but the guidance wasn't so great. So maybe
A little pullback in European bank stocks too, not helping.
Yeah. Well, I mean, that's perhaps why.
Morgan
Yeah.
Stanley setting up here, very, very interesting level. You had that low on earnings day at 55.65. Big on, I can't remember last time.
I think that holds.
Yeah. Well, yeah, we're $1 away here. So I don't think there's any danger real Robinson until, you get below that gap area. I don't know. Just to me, like 500,000 shares to sell on the open. I mean, wouldn't you rather
600,000 now?
Would
It's
you
growing.
want to give someone an order to say, sell me 600,000 today? Not held? I mean,
It's a huge order.
Yeah, that's
And
like
we don't know if it's made up of multiple orders. I could go
true,
and open my book,
true.
and sometimes you can see
Yep.
that, but they just give you the overall imbalance. It's big. I mean, that's why it's down 1.9% compared to some of the other banks that are only down 0.7, 0.8. So I'm not sure if I'm missing a headline. If there was something, I mean, we had 3 days here, so there could have been something
Seeing a
else.
downgrade here. I can't confirm this. Travis Mann has said that Citigroup downgraded it.
Well, that would make sense. That's why it looks like Daniel's saying too it was downgraded. I don't see that actually, but you could be right. So again, we've been so all over the China news. I haven't really dug down into a lot of the ratings here yet. So I'm just going to look at that right now to see if I can actually get confirmation. But it sure is trading like it's downgraded.
Well, in the meantime, you can look for that. I'm going to bring on our guest today, who I want to bring on right now to 8:35. Chris Buck is his name. He is the head of capital markets and sales for ROBO Global. They are the proprietors of two main big indexes here: the ROBO Index, Robotics, Automation, and AI, and the H-Tech Index, which is for healthcare technology and innovation. The corresponding ETFs are ROBO and HTEC. Chris, good morning. Let's see if you can hear me okay. Chris, if you can hear me, say you can hear me. Let's try this. Chris, you're with us. All right, Chris is not with us right now. I will figure that out in the background while you guys.
I do have a confirmation that Morgan Stanley,
Okay.
yes, Citigroup did downgrade here today. I have it now. I found the note. So Morgan Stanley downgraded at Citigroup to neutral. That is why it is trading down more than the market, and that's probably the reason it has such a big sell imbalance here this morning too.
All right, let's also take, you mentioned the sell balance in Bank of America. Interesting. I mean, you had your consolidation here. You had the earnings. I believe that took it up to its recent high of the move. Nice run up. You've had this in several occasions. You've had a nice run up. You've had a consolidation. Trend is higher, and then the consolidation resolves to the upside. You had that in the middle of December until that high that you just made in January. Now you have another pretty long consolidation period. The low of that consolidation comes in at 34.34, parallels at 34.60. So let's call 34.50. That's the level for Bank of America to if it breaches today, which it already has, get it back and hold that. If not, you're breaking out of the bottom of a long consolidation period after a nice run on earnings. And then also just thinking along those lines, JP Morgan tried to make a new all-time high on earnings, got really, really close, and then sold off the next day or two. So, a lot of people talk about earnings, pre-earnings runs and what do stocks do to earning. A lot of Dennis has his strategies for that, but a lot of times like to keep an eye on what the stock does after earnings. A good report. Do you have follow through, or do people use that as a taking some profits opportunity? That's so far what we're seeing here in JP Morgan. Let's see if we can grab some stocks here.
Well, we also had Halliburton earnings. Do you want to go
Let's
to that?
Yeah, do them.
Yeah, okay. HAL reporting this morning, Q4 adjusted EPS beat by 3 cents, 32 versus 29 cents per share. Sales 5.19 versus 5.11 billion dollars. So a beat for Halliburton in the fourth quarter.
I'm not sure what it's done pre-market because first time I'm bringing up Halliburton, I see it up only a nickel. I'd imagine maybe actually rallied more and probably sold off. I'm just guessing. And now Joel brings up the charts. Is exactly what it did. Same thing happened with Schlumberger. Schlumberger was up $1 on its earnings report and quickly gave it back. So, I mean, there's just so much overhead supply in all of these oil stocks. It's like every rally gets sold. And I know Halliburton had a nice run from 18 to 24, but let's put it in perspective and go out to the monthlies. This thing was $60 a year and a half ago, or $57 a year and a half ago. So again, there's just so many people who are burned on every oil stock. The trade has always been to sell the rallies. We've had a nice significant rally here in the last 2 months in some of these oil stocks. And now you're starting to see the selling come back into it again, into some of these stocks. So I feel like they're heavy. I feel like all these stocks are heavy once again. Now Halliburton has indeed went to the red. If you're buying spikes in oil stocks, you're doing it wrong. That's what that's my opinion, but I believe that you're doing it wrong. The spikes are to be, it seems like the market just comes in and sells every spike on these oil stocks.
It did have developed some good daily resistance here. This was back at the end of 2019, 25.5. That's in the rear view mirror now, though, folks. You are looking at the recent low of the move at 23.37. That flanked by a couple other highs at the 23.50 level. So that will be now going all the way back to January 8th. That 23.37 has been protected. So consolidation after the move up. Let's see if it can get back above 24.5 close. Wait, did it just 23.91? I thought I saw 22.91. So
yeah, it just ticked down to 23.70, and now it's come back to scratch. But people who are buying this morning already have buyer's remorse.
23.50, and that crude rally, that we had back with the Iranian crisis. Boy, was that ever stuffed out. So you're looking for a catalyst.
Quickly. I mean, it can't rally. And in that day, it couldn't rally. There was all the selling opportunity. It's telling you you're on the wrong side of the trade. When you get news, that should be favorable and the stock sells off on it, or, the commodity sells off on it, it's an indicator that there's just too much overhead supply again. So it's tough. Everybody wants to call the bottom in crude. Everybody wants to come in and be a hero and say, this is it. This is turning around. There's other factors involved here, though. Like I'm going to say, the number one thing that I believe is putting the heavy weight on crude over the last number of years is the electrification of cars. We all go electric. You don't need as much gas. Crude is going to, there's still uses for it, obviously, but that's a huge problem if you're an oil producer. You think about and in the rumors, that 100 years ago we could have electric cars, but these are obviously not substantiated rumors, or but we don't know. But it was rumors that the big oil companies were squashing the technology as much as they can. Well, it's out of the bag. Electrification is coming. There's no stopping it here now. What does that mean for crude stocks going forward? What does that mean for your gasoline producers? I mean, if you don't need, if you're going to be, if the cars are going electric, and I think. Do you agree with me on this, Joel? I think in 10 years, you're going to see over half the cars on the road are electric.
Well,
I think
there's going to be less cars on the road.
Oh, here we go.
Well, we can go less cars, and that's not good either. So both of those are bad for crude.
We need Beyond Meat burgers.
Okay, let's say hypothetically it's not less cars, but there's more electric cars. I think we can safely say there's probably going to be more electric cars on the road. What does that mean for your gasoline and your crude and your oil producers? What does that mean?
Let's ask this question of our guest, who I think we have now.
Okay.
Chris Buck, as I mentioned before, head of capital markets and sales for ROBO Global. Chris, good morning. Can you hear me now?
I can, and I apologize for the technical difficulties.
That's okay. It's okay.
We're all about technical difficulties.
We have them a few times.
A few times a week here. So, okay, Chris, we just got on this tangent here from oil stocks to electronic cars, and you work for ROBO Global, the proprietor of a robotics and automation index. So tell us your thoughts on this matter here.
Yeah, I mean, it's funny. I was looking at cars just this weekend over the long holiday, and I think you're right. You're trying to think through, and of course, I was looking at a gas car, and the gentleman was saying that the electrical grid can't even keep that many electrical cars in one particular city. I live in the Dallas-Fort Worth area. There's a ton of people here, but if everybody got an electric car, the electrical grid's not even set up for it, which I don't really believe. I think that's a sales pitch. But I think you're exactly right. Change is among us. There's going to be dramatic changes in the future, and that's really what we're about at ROBO Global, is helping investors kind of think forward and understand the big secular trends and then position their portfolios for it.
So would you be going and buying any of these gasoline or oil stocks here, or what are your thoughts here going forward? I mean, I just think about this and it's like, I am very underweight oil stocks because I'm very concerned about where we're going in the next 10 years for oil companies.
No, I think you're right. I've always been really, really long Exxon personally. I let go of that position a week ago, but listening to Davos this morning, where at some point you got to be participating in these companies. They're huge investors in renewable energy, but I definitely think there's an overweight, but at some time they're going to hit a bottom and they're going to be a compelling value for a buy. I just don't know when that is, but I think you're right. The trend is your friend, especially with electric cars. And you look at shared economy with autonomous driving vehicles. There's certainly a lot going on, but at some point, I think kind of the oil stocks, the big engines are not going to be electric. So we're always going to be relying on carbon at some point.
Chris, can you tell us, I guess, how to participate in this trade here, or I guess if you want to talk longer term, make it an investment? A lot of these companies are not U.S. companies. There's a lot of Asian companies involved in the space. You've got the this index here that presumably tracks robotics and automation. So give us some examples of how to participate in this theme.
Sure. So just take a step back. We look at the ROBO Global Index and stock, ticker ROBO, ROBO, we launched 6 years ago. It was up 30% last year, relative to ACWI. Since inception over the past 6 years, we've handily built ACWI. And ACWI is just a good market cap weighted, broad global index. Now, 25% of our portfolio is in Japanese securities. And similar to the U.S., they've had a very aging population. They didn't allow immigrants to come in and work. So they've been automating for many, many years. We're likely to see that trend continue in the U.S. But as an example, there are stocks like Toshiba Machine, which was trading almost at a 2 standard deviation to price to book, almost an extreme value level. And so a lot of the Japanese stocks that are reliant on Chinese exporting to China, the China-U.S. trade war has put an overhang on these stocks. And we're seeing, just as an example, to Toshiba, one of the activist shareholders launched a tender for it. Some of these stocks are at 20-year lows. And if you're looking for pockets in the market that are not at dizzying heights, certainly some of the U.S. mega cap stocks, you can diversify away and capture some of the future growth in some of these really beaten down names that have really, really high growth prospects, primarily due to the demographics of the world getting older. There's going to be more people over 65 than under 5. We simply are going to need more automation going forward, and it's a long secular trend.
What about other ways? So you have this Robo index and ETF, but there's also a opportunity that you see in healthcare innovation. So tell us about that trend and what specific catalysts there may be this year, if any.
Oh, yeah. I mean, you look at healthcare. Traditionally, we took a step back. We have, in ROBO Global, we have 12 subsectors. We have about 90 stocks in about 15 different countries. One of our largest sectors has been healthcare. As we move from analog to digital, and as AI performance capabilities and processing goes up, and the cost comes down, there's going to be profound changes in our healthcare system as we move from analog to digital. And AI is like dumping gasoline on fire, essentially. And so our strategy is focused on the prevention of sickness, the technology around preventing. If you look at traditional healthcare funds, it's more about treating the sick, hospitals, pharmaceuticals, kind of, what happens when you're sick. We do a pretty good job of taking care of you, but it's super expensive. So we're focused on AI, genomics, precision medicine, synthetic biology, lab automation. And with AI, we're going to see profound changes to predict and in some cases to eradicate diseases to keep people from going sick. And the ticker's HTEC, HTEC. It's about 80% U.S., but we're really excited about that fund.
I guess a interesting day to have you on in light of what's happening.
Just going to ask you.
What's happening in China. I don't know if you guys are following that or if there's any implications for the types of companies that you invest in as far as what's happening in China. Is there?
Yeah, we do. One of the biggest pockets of medicine is telehealth. And so we own 2 stocks, Teladoc, which is U.S., and Ping An in China, to China A share. And there's about 300 million Chinese citizens, and it's really you're jumping onto your laptop or your tablet, and you're calling a doctor, and you're saying, look, I have these symptoms, especially if it's flu related. You can be prescribed medicine, it can be delivered to you, and you can start on your regimen. So yeah, Ping An is a very interesting stock. I haven't seen the price action today. My assumption is it's going to be strong like some of the other healthcare stocks in China based on the back of this scare.
Yeah, so that was Ping An Healthcare, and then the other one was Teladoc, right?
Teladoc is the largest telemedicine provider in the U.S. It's actually part of United Healthcare. I've used it a couple weeks ago. You can talk to a doctor within an hour. You don't have to take off work. And you can sometimes get your antibiotics within 2 to 3 hours as opposed to taking a whole day off the job. So it's really going to be, about delivering medicine that's very tailor specific to you in a way that kind of makes costs come down and gives you a better outcome.
We're on the line with Chris Buck. He's head of capital markets and sales for ROBO Global. What about the technology behind these stocks? I mean, I see that are behind these companies. I see your fourth biggest holding is NVIDIA Corp, making the chips, the guts, any other potential plays in the technology or the chips. They're going to be responsible for bringing robotics and automation here to the next generation.
I'm glad you brought that up. And one of our main sectors in robo is computing and AI. And you really look at chip processors, they are improving faster than ever. They're using the speed to improve the applications of AI software. And you look at the Internet of Things, currently there are 30 billion devices out there. Now, I think you mentioned this earlier, bringing on the power of 5G. And you start thinking about investments in autonomous driving vehicles, smart cities, smart factories, big data, and AI. The processing power of some of these chips are really going to drive some of the benefits to society, just because you're going to be able to take a lot of data set and have infer with AI to help speed things up, to deliver products and services faster and better than before. Cisco made a pretty big comment. By 2030, autonomous vehicles alone are going to generate more data than the Earth's entire population does today. So you're going to have NVIDIA chips, faster CPUs, GPUs, processing this. And really on the back of it, machine learning and deep neural networks and reinforcement learning are really all going to be kind of wrapped into delivering better services.
All right, we've been on the line with Chris Buck, head of capital markets and sales for ROBO Global. Chris, thanks so much for taking the time this morning, and have a good one.
Yes, sir. Thank you so much.
All right, thanks, Chris. Down 10 1/4 handles, 33.14.75. That's down 10 1/4 handles. Still pretty quiet here. Tesla still trading firmly in the green by 13.41 at 523.91.
Just going through the ratings here, which I also have not really done this morning too closely. There's been so much other stuff to focus on, but it is a little quiet out there. We're getting, let's see, I see an upgrade from Costco and Oppenheimer to outperform. Goldman Sachs is upgrading Ring Central and Avaya this morning, both to buy. We've got a Jefferies upgrade to Intel, upgrading them to hold. That's interesting. Intel reports earnings later on in the week. Raymond James upgrading JB Hunt to outperform. KeyBank upgrading L Brands to overweight. Those are kind of the biggest upgrades that caught my eye this morning. As far as downgrades are concerned, not too many that have interested me personally this morning. So,
yeah, we talked about the Morgan Stanley. That's the reason MS is trading down significantly in the pre-market. You also had Credit Suisse downgrading US Bancorp, so USB is trading down.
To underperform. That's interesting. It's underperformed.
Yeah, because it's to sell, and the banks have a weight on them just because the TLT is trading higher here this morning. I mean, TLT has been kind of in the gutter. Well, had a bad Friday and bouncing back here this morning, obviously with the overseas news there and nervousness jumping back into money's flying back into the TLT because of that. I don't know. Like it's this is going to be a really tricky market because you've got a new worry. So, but this market is the best at climbing walls of worry.
Yeah.
So did they just shrug this off and buy this right back? It's possible. It's also possible that maybe some money manager is going to say, I'm going to wait a day or two and see where this is going. Is this virus here overseas going to get worse? It's going to get better. It's hard to say. That LAKE though, that spinner alerted us to, is up 20% now. But this is just 800 shares just traded, and it was actually off exchange. So again, though 12.25 bid to 1350, you can see that there is a few people banking that, hey, maybe this is not going to be a one and done type deal. I mean, you wouldn't come up and buy a stock like this up 20% if you thought that this was going to be over in a day. So there's going to be headline risk here in this market. There's a new worry out there. We do have, we did see Ebola really knock the market down a few years ago, when obviously SARS was a very significant issue for the market back in 2003. So we have some history here with this type of stuff. It's all about how bad it gets, though.
Just want to mention the Costco upgrade. Weird timing. I mean, there was some opportunities to do it before. The analyst has chosen to do it now, trading up $1.12 here at 305.80. You did tick a tad higher, but your all-time high for Costco, if you're looking for that, 307.10. That was your all-time high. Your all-time closing high, if you were looking for that as a possible exit, you got it right there, right now, 305.21. That was your all-time closing high on November 7th. That was the same day it made its all-time high. So Costco traded up $1.12, 305.80.
Let's look at Netflix here. We haven't talked about them really this morning. They are due to report after the close today. This is a highly anticipated report. It is the first earnings report we're going to get since the launch of Disney Plus.
But I'm going to refute that, because isn't Disney Plus still free?
No.
Is it not free? Oh, for the Verizon people.
It's free
just for the Verizon people.
Yeah,
I'm paying. If it was free, I wouldn't be paying. I'm paying.
No.
It's only free
okay.
for a year.
I mean, you could make a lot out of this report. You don't know how many people have already got Disney and canceled, like Dennis, or thinking of canceling here. So it's had a nice run up into the report. I just don't see how. It's going to take a couple reports, I think, to see how this all plays out for Netflix. But
I've given my opinion in the last week, and I turned to a stance where I don't think Disney Plus is going to affect Netflix.
Yep.
And I thought originally, I was like, competition's coming. I was on, on the show saying this, 6 months ago, and the stock got hit. I mean, the stock went from 330 down to 250. But it's kept climbing that wall, and I think, the market was ahead of at least my thought process on it, where they're realizing that, this Disney just doesn't have enough content. They have a lot of good content that came out on November when the thing launched, but they're just not coming out with new shows. And I look at there and I flip it on and I see the same exact stuff I saw 3 months ago when I subscribed. And The Mandalorian's done. We've all watched that. They're going to have new, and that's awesome. I mean, but you need 10 Mandalorians. You need a whole bunch of stuff, or you need at least more content, something to, hey, I haven't watched this yet. Let's go flip this on. The kids love it. I'm not going to get rid of my Disney Plus. And if you have young kids, you're probably going to subscribe to it. But are you going to get, those people who are coming in that don't have the 5-year-olds and the 6-year-olds and the 10-year-olds, or not, I don't even know about 10, because there's just not the new content. So I don't think people are canceling their Netflix to go to Disney Plus. And I don't know what the Comcast product, maybe it's going to be different. Maybe it's going to be, so there's definitely competition coming for Netflix. There's no doubt about that. It's just, is the competition going to be enough that you start seeing people unsubscribe from it? I don't know yet. The Disney, I don't think is a threat, though.
Well, we'll get our first real data point today.
But are we really going to? So we're going to get our first real data point. And a lot of people potentially, jumped on, this bandwagon of the Disney Plus. But yeah, did they cancel the Netflix? I guess.
But don't you think it'll go a long way in setting the tone either way? If they
it's a big report.
Right.
What's the straddle on this thing? I bet you it's significant. What are they pricing the straddle? You got it in front of you? Let's go look at the close. Obviously, options aren't open there at this time. But
I'd say I'm
going to grab it.
At least $15.
Well, I think so too. I think it's at least. I think it might be $20. Let's go look. Netflix. Just looking at the Jans. So this week expiration, Jan 24. Looks like it went off the board. Oh, Joel, that's higher than that.
25.
Yeah. Yeah, it looks like about 20, 25 points. Wow. How do you make money buying options? Like here, me and Joel are thinking, well, 15, 20, you probably could move 20 points on this. They got it priced in 25. I mean, okay. Yeah, and that's obviously, going both directions. So it moves either way in 25 points, you're going to be making money. I don't think you make money doing that. Not in the long run. Maybe you could get 25-point move off this thing. The market makers seem pretty good, but I don't think it's moving 50. So, to get a 2-to-1 risk reward on it. Maybe you're going to guess the direction. You can, buy the puts for $12. If you want to go 337.5, if you want to guess the direction correctly. Hard to make money buying options. It's one thing if you've listened to this show for the last 6-7 years, I hope you guys have learned at least one thing. And that's that, especially since we have Nick Shaheen, who obviously sells, is a net option seller always. It's hard to make money buying options. They're little lottery tickets, and yes, you'll win every once in a while, and yes, you'll get a good one. But man, those premiums they're hard. It's hard to beat them.
And on that note, that will be it, I believe, for our show today. You can always catch our podcast on iTunes, SoundCloud, Spotify, TuneIn, Stitcher, or just rewatch our show on youtube.com/Benzinga TV. I want to thank our guest today, Chris Buck. Thanks to all of you in our chats, both chats on youtube.com and on premarket.benzinga.com. You can always give us a call as well during the show, before the show, after the show. Leave us a voicemail, 734-494-0246. Everyone have a great rest of your day. We'll be back with you on Wednesday.